Okay, this is just a quick video to familiarize viewers with the concept of a sector rotation. What does that mean in sort of stock market jargon? So remember from one of our earliest videos, we talked about different ways to break down stocks across the stock market and to look at them by sector. And you have industry sectors that have, if you think about it, they're going to have different performance based on what's going on in the economy. So if you think about a consumer products company or the sector overall, packaged goods or soda, beverages, beer companies, tobacco companies, they pretty much are going to sell the same amount of merchandise regardless of what the economy is doing. Maybe a little less if there's a big slowdown in the economy, but in general, these companies are steady in how they do their business. Now, then if you think about industrial companies or capital goods companies, they tend to do much, much better when the economy starts to heat up, starts to accelerate, and they do horribly when the economy slows down or enters a recession. So, and that's because a lot of the sort of products being sold in the industrial sector or in capital goods are very high ticket items, like bulldozers or tractors or, construction equipment and or tank loads of chemicals, for example. And these are products that companies will buy more of when things are going really, really well, but they may buy a lot less of these products when things are not going that well in the economy. Okay, so these are just some simple examples. But you can also see the movements of capital from one sector to another in the stock market, and that can tell you what's going on. In fact, I think one of the mistakes that a lot of novice investors make is they think that they're supposed to have a view about what the economy's going to do, that we're going to go into a recession or we're going to come out of a recession and then invest accordingly. I think it's a lot healthier and a lot more of sort of a sophisticated approach to kind of know that you're not going to know necessarily what's going to happen with the economy, but you can take your cues from the stock market and you can see certain rotations, and that tells you what's going on in the economic backdrop. So to actually flip it and actually look at what's going on in the stock market. So, for example, if you start seeing about rotations of capital, let's say, industrials are doing better than consumer products companies, and this has been something that's been going on for a while. And there's no news that's company specific. You just see this delta in performance between these two sectors. That may indicate that the stock market is reflecting an improvement in the economic backdrop. Likewise, if you see the opposite, this can tell you the reverse, that the economy is probably slowing or probably will continue to slow. And then furthermore, there's other things that sector movements can tell you, sector rotations. So, for example, let's say, what would you think about if you thought to look for inflation plays in the stock market? And so you could use the stock market and look at kind of across sectors, what are companies that do better under circumstances of inflation? Well, commodity companies, mining companies, and we've talked about this in prior videos as well. So you can look at these types of companies, and if you see generalized outperformance from them, that's a cue that, hey, this inflation thing, this might be more and more of a problem. So you use the stock market as kind of a signpost to you to communicate what's going on in the overall economy. So think about this as just a way to think about what's happening, a way to look at the stock market, and instead of trying to guess what's going on, to use the stock market to give you clues about what's going on. It'll make you a more sophisticated investor. So as always, thank you for watching, and I hope these videos are helpful.